Ladies and gentlemen, good day and welcome to H1 FY24 results conference call of Unihealth Consultancy Limited, hosted by Kirin Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Chandini Chande from Kirin Advisors. Thank you, and over to you, ma'am.
Good afternoon, everyone. Thank you for joining conference call of Unihealth Consultancy Limited. I would like to welcome Dr. Akshay Parmar, Managing Director. Over to you.
Very good afternoon, ladies and gentlemen. It is a pleasure to connect with all of you. And thank you for joining us today for Unihealth Consultancy's inaugural conference call to discuss the financial performance of the company for the first half of fiscal year 2024. I extend a warm welcome to each one of you, especially considering the recent milestone of our listing on the NSE Emerge platform. Before we delve into the specifics of this half-yearly for fiscal 2024, let me provide a brief overview of Unihealth Consultancy Limited. Established in 2010 in Mumbai, we have evolved into a global healthcare service provider with a strong footprint in Africa. Our operations span various healthcare sectors, including medical centers, hospitals, consultancy services, pharmaceutical distribution, and medical travel. With a presence in 4 countries across 2 continents, we boast a team of 150 doctors and specialists who cater to more than 100,000 patients annually. Our commitment to quality healthcare is evident through our 200 operational beds and a workforce of over 500 employees across all our units combined. The company's subsidiary, Unihealth Pharmaceuticals, registered in India, specializes in procuring and exporting pharmaceutical products and medical consumables, serving hospitals in Uganda, Nigeria, and Tanzania. The company is the authorized distributor for leading Indian manufacturers for multiple geographies in Africa. Under our flagship brand, UMC Hospitals, we presently manage 2 multi-specialty facilities in Uganda and Nigeria, along with a dialysis center in Tanzania. Beyond this, the company is actively engaged in healthcare consultancy projects in India, Kenya, and Angola at present. To accommodate our growing team to support the company's expansion across multiple business verticals, we are in the process of acquiring additional office space and strengthening our workforce. To stay at the forefront of healthcare innovation, we prioritize ongoing staff training, investments in state-of-the-art medical equipment across all of the facilities, and encourage research and collaboration to explore innovative solutions. Our successful IPO and subsequent listing on the NSE Emerge platform in September 2023 have paved the way for significant growth of the company. In the previous fiscal year, that is FY 2023, our company reported consolidated revenues of 4,603.01 lakhs and an EBITDA of 1,691.53 lakhs with a PAT of 765.67 lakhs. Now let us shift our focus to the operational and financial highlights of the H1 of the ongoing fiscal year. The first half of FY24 has been marked by remarkable milestones for our company. The key one being the successful launch of our SME IPO, followed by a successful listing on NSE Emerge. Consolidated total income for the first half of this fiscal year stand at 2,285.19 lakhs, with an EBITDA of 784.46 lakhs, showcasing a robust EBITDA margin of 34%. The company has registered a PAT of 429.76 lakhs during this period, a formidable PAT margin of 19%. Our operating cash flow stood at 1,246.61 lakhs. Standalone H1 for this fiscal highlights reveal a total income of 187.83 lakhs at an EBITDA of 64.39 lakhs, which is at an impressive EBITDA margin of 34%, and a net profit of 49.61 lakh, exhibiting a strong net profit margin of 36% on standalone basis. Our operating cash flow remains solid at 619.95 lakhs. Broad by the success of our IPO and positive industry trends, we are proactively expanding our presence in key target geographies and enhancing our service portfolio across all existing hospitals and medical centers of the company. Additionally, we are investing in our workforce and nurturing future leaders from within the organization to support our ambitious expansion plans in the near future. The strategic move, our board has approved extending debt to its subsidiary, Unihealth Consultancy Private Limited. This is to facilitate increased export and distribution of its portfolio products in Uganda, Nigeria, and Tanzania going forward. Furthermore, we are in discussions with Air Tanzania and Myanmar Airways International to explore collaborations for unique medical travel programs, aiming to facilitate the travel of patients from these countries into India. We anticipate concluding these discussions by the end of this calendar year. At present, we have a capex plan of more than 2,500 lakhs for the next 2 years. We are strengthening our capabilities across the verticals we are present in and are ready to leverage the growing business opportunities across territories of our presence. Our mission is to increase our bed capacity to roughly around 1,000 beds from our current 200 bed capacity. This is targeted at the end of fiscal year 2025-26. We are confident that our strategies will bring noteworthy business growth in the coming year, and your faith in the company and continued support will continue to guide us to reach higher targets in the coming times. I appreciate your attention, and now I invite you to participate in the Q&A session. We are eager to address any questions and queries you may have. Thank you once again for your continued support and for being a part of this exciting journey.
Thank you very
I'll
much.
be good to take any questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prakash Jaiswal from Shree Capital. Please go ahead.
Thank you. Congratulations, sir, for the great set of numbers. My first question is, sir, how does company position itself to go globally, and what is unique offering contribute to its competitive edge?
Thank you, Prakash. I'll take this question in 2 parts. One, how do we position ourselves globally? So our target markets since the beginning of our journey, that is in 2010, have been sub-Saharan Africa. So for us, the targets are usually underdeveloped and developing countries, and that is where the company's focus has been. The uniqueness, the second part of your question, the uniqueness of Unihealth as compared to its peers or competitors in these geographies is that we provide comprehensive solutions. We follow something which is a DBO model of business, which is design, build, and operate when it comes to medical centers and hospitals. So we have a solution right from the beginning, that is from the time that we have land available with us or basic infrastructure available with us, and we specialize in converting that existing infrastructure all the way into an operational facility, moving forward and operating it as well. So when it comes to geographies like Africa, where we are present or where we intend to expand, getting the right mix of consultants actually help you put up a hospital, and then getting the right operator in these markets is quite a challenging task, from the local perspective. With Unihealth, they're able to get all of this at the same level. Within the same company, you've got specialized teams which are taking care of your initial planning, conceptualization, designing architecturally, as well as interior equipment planning. So that is one team of the company which works as a standalone business unit, which caters to that requirement. We follow it up with commissioning services and also operating. Now, the entire business model over the years, from 2010 that we started till today, has evolved into an interlinked business model. So, the first level, like I mentioned about our hospitals, and we've got our consultancy services which can help the client or the target, principal, help design the facility, and we come in as operators. We follow it up even with consumable exports and pharmaceutical exports from India. So that effectively is allowing all our functioning units to bring down our cost of inventory, which in a hospital is a major cost. So the two major cost centers for our hospitals are the cost of manpower and the cost of inventory. So being in-house supply chain, the cost of inventory for us reduces considerably right from the time that we are making capital investments. So even in terms of the initial equipment, compared to a peer which is locally present in Africa, who's going to be sourcing equipment globally or locally from within the continent, we are able to source the equipment at a much, much lower cost. What that allows us to do is bring down the capex considerably compared to our peers, and typically we can see that half of our battle is won at that level itself. This we follow up with a reduction in the cost of inventory when we talk about the operational expenses later on. So that allows us to increase our EBITDA margins considerably compared to our peers, reinvest significantly in newer equipment, newer technology, and stay ahead of competition.
So, sir, what is your capex plan?
So going forward, it is now our two facilities that we have in Uganda, where we are among the largest in the country. We have a 120-bed facility, which is completely owned by the company, by our joint venture company out there in that country. In Nigeria, the model is slightly different. We do not own the real estate. We have it on a long-term revenue share sort of a lease model. Going forward, now the capex plan that we have outlined for the next 2 years, which is at about 2,500 lakh to 25 crore rupees, is typically aimed at investing in equipment. We are not looking at investing in infrastructure. We are planning to go on an asset-light model. Because of our existing hospitals, which act as proof of concept in these geographies, we've got a good number of opportunities where we have infrastructure ready for us, where they are open to giving us the infrastructure either on a revenue share model or on a long-term lease model, which works very well for us because then we are reducing our capital investment in land and building. And we focus mainly on the high-end equipment that is required to run these specialized hospitals. So the focus going forward as we expand from our 200 beds to the targeted 1,000 beds is going to be more on operations and management of these facilities and investing in the equipment, not in the real estate, so more of an asset-light model.
Okay. And sir, how much overseas business contribute to our revenue and profit?
So at present, majorly I would say about 90% plus is contributed from the overseas business, both in terms of revenue and profitability. The business which is locally, which is there on a standalone basis, the Unihealth Consultancy, is typically its consultancy services business and the pharmaceutical distribution and export. Now, pharmaceutical distribution and export is something which was recently started. In all these countries, you need registration of the manufacturing facility, the plant, as well as all the drugs. And that process can take about 18 odd months. We've initiated that process in certain countries with certain companies, and we are expecting all the approvals to be there in the next about, anywhere between 9 to 15 months, different products at different levels. So at that stage, so in the fiscal year, somewhere around 25-23, the contribution from that division will increase considerably once all these products are registered. At present, about 90% comes from these overseas subsidiaries, joint ventures of the company. Going forward by 25-26, the targeted 1,000 bed capacity that we're looking at, of that, we are also targeting to have about 300 to 350 beds on an O&M, as an operating and management contract basis within India. Target markets right now are mainly Western India. So that will also significantly contribute to the top line and bottom line as we move forward in the next next two fiscals.
Okay. Sir, as you said, we are increasing bed capacity. So it would be organic or acquisition strategy?
So we are pursuing both. Because of our, like I mentioned, because of our existing hospitals, the trust that the brand has in these geographies is very high. There have been many Indian players or Indian hospital groups which have gone into these countries, but have not been able to actually commission a facility. So that since we have commissioned facilities, it gives us a massive trust benefit from the local market, and that is where we are well positioned even to consider acquisition or partnerships with players who are keen to invest in the infrastructure aspect of the hospital. So when we want to expand from here to 1,000 beds, part of it is going to be organic. When I say organic, it's mainly O&M basis, where we get access to infrastructure which is available by a local partner out there. And part of it may be acquisition also. And we are going to be acquiring, we will be looking at a 50-bed to a 100-bed facility. That is going to be the model for our acquisition plan. So we're pursuing both. These geographies have offerings for both. Depend, going forward in the next 2 quarters on how that entire structure falls into place for the company.
Okay. And sir, how many doctors are on contract basis and permanent basis?
So out of the 150 odd specialists and consultants that we have got about 50 to 55 doctors which are permanently with us. The remaining ones are consultants who consult at our hospital and who are also consultants at certain other hospitals in the geography.
Okay. Thank you, sir. Thank you so much.
Thank you.
Thank you. Participants who wish to join the question queue may press star and 1. The next question is from the line of Shivam Sharma from PCR Capital. Please go ahead.
So with the successful IPO funding, which geographical areas we are targeting for expansion, and are there any specific healthcare sector prioritized?
Right. So in terms of expansion with the use of proceeds and going forward over that we are looking at is twofold. One segment expansion we're looking at is within our existing infrastructure and hospitals. That is the facilities that we have in Uganda and Nigeria to add on super specialty services. So there's a great demand for super specialty services like ophthalmology, infertility, cardiac care in these geographies. So we are going to be targeting making investments into the required equipment. Since the infrastructure is already in place, since the senior manpower is already there, since the nursing staff is already there, these investments are, critical from the perspective that they will allow us to generate higher revenues at much higher EBITDA. Because the cost of the investment or the operating cost both is only in the equipment and the specialized manpower to operate that particular equipment. All the remaining expenses are already being taken care of since it's an existing infrastructure. So part of our expansion is going to be within the existing facilities where we have the patient flow, where we have all the infrastructure ready, where we are going to be investing in setting up super specialized centers, mainly looking at ophthalmology, infertility, that is IVF, and cardiology to begin with. At a later stage, we will also explore cancer care in a much bigger footprint. But that may come only after 1 month or 2 going forward. And the second part of expansion in terms of the geography that we are looking at, outside the existing facilities, we are actively looking at Tanzania, where we have presence in terms of a medical and a dialysis center to put up a hospital and explore both acquisition opportunity as well as organic growth. Other geography in terms of target geographies which we are very keenly looking at is Kenya. So Kenyan healthcare is also booming. So we are looking at Kenya as well in terms of a possible opportunity that we may have. And there's a significant focus on the Indian territory itself. Like I mentioned, that by 2026, by the time that we intend to have a 1,000-bed capacity, about 300 to 350 bed strength we're targeting from India as well, Western India to be more specific going forward. So that itself is going to be a geography of key focus. Other than this, in terms of business verticals, there is, I wouldn't say more focus on one vertical than the other, but there is opportunity across all the verticals that we are pursuing. Like we've earmarked, registrations of a lot of products for Unihealth Pharmaceutical going forward in these geographies of our presence in Africa to export a larger number of consumables and pharmaceutical products. Similarly, we are focusing on marketing our consultancy services to explore getting increasing number of hospitals which would want to take our services both in India and in Africa, which are our key strength markets. Similarly, for the medical travel business, like I mentioned during the initial presentation, that we have started discussions with Air Tanzania and Myanmar Airways International. That is again to launch unique medical travel programs in collaboration with these airlines to get patients from their geographies, the countries they are catering to India for required medical treatments. So there is a focus on every single business unit within the group, business vertical within the group as we move forward.
Okay, great, sir. So my second question was, are we planning to spend on brand recognition? And if yes, how much?
Okay. So brand recognition, like, for the African territory, we are already a fairly well-established brand. UMC as a brand is well recognized in those geographies. So we do not foresee the need to actually spend specifically on just, creating brand awareness. The idea is that as and when we specialize or we add on more medical centers and hospitals in geographies, the brand will automatically strengthen further. So definitely from an African perspective, we are not looking at earmarking any specific spend on developing the brand further or making it stronger. When it comes to India, again, in the industry of our presence, as medical travel consultancy, Unihealth is a fairly well-recognized brand. Definitely, Indian market is such that you need focus on making your presence felt across different formats that can be in the form of marketing, so your services as well. So yes, we will be working on a strategy, not to specifically just highlight the brand, but to spread across the word of what exactly we are doing amongst the targeted clients, the targeted markets, or targeted groups.
Okay, thank you so much, sir.
Thank you, Shravanji.
Thank you. The next question is from the line of Chinmay Rane from Cogent Finvest. Please go ahead.
Yeah, good noon, sir. So in some of your communication, I heard that you wanted to increase the capacity from current 200 bed capacity to around 1000 bed capacity. Is that my understanding correct?
We are looking at increasing 200 bed capacity to 1,000 beds by 2026 fiscal year. Yes. So it is not an expansion of the bed capacity of our existing facility. It is basically adding on newer facilities as we go forward in terms of either organic growth of setting up new facilities or acquiring operations and management of certain existing facilities which are either already operating or are in the process of getting commissioned. In our understanding, especially in terms of the African market, any specific standalone unit, a single hospital, is rightly positioned if it is between 70 beds to about 120, 130 beds. Anything beyond that, in terms of a single site, may not be able to generate profitability in the same proportion. So the highest profitability in terms of the overall revenue structure expenses is best in this particular segment. So like in Uganda, we already 120 bed. We don't foresee a increase in the same facility. We are open to setting up more medical centers or smaller hospitals in the countryside of Uganda. So to feed in this, the same goes with Nigeria. Like we got a 80 bed facility in Kano. We will not look to expand that facility in Western. We would rather put up a smaller facility in some other city which is equally lucrative.
So is it just to understand it more clearly, so is it not a worthwhile or not an operationally efficient if you increase the capacity in the same unit by more than what it is currently having? Like in Africa, you said it is 130, or in Uganda, you said it is 80 beds. So it is more operationally efficient if it is around 80 to 100 bed or maybe 80 to 120 bed. And is that understanding of mine is correct?
Yes. In these geographies, 80 to 120, 130 bed is operationally the most efficient, bed strength. That is also something we have understood over a period of time. It is, by our presence in these geographies. So with 120 beds in Uganda, we are also amongst the largest facilities in the country already. So, anything beyond that, because the patient profiling is such that you will not be able to attract the quality patients and quality services, because our focus is again on super specialty and specialty services. We are not keenly looking at something which is treating malaria or typhoid or just mother and child care. So, when you look at higher revenue generating specialties, then the bed strength becomes ideal at about 100 plus minus.
Okay. And in that case, what would be the ideal revenue per bed you are currently earning and your expectation going forward?
So ideal revenue per bed by the third year of any facility is about $100,000, which in Indian terms would be ranging from 80 or lakh rupees per operational bed. So the average revenue per operational bed that we would target would be in Indian terms about 85 lakh rupees at present. Definitely, as we move forward, that number is likely to change based on inflationary requirements and a lot of other factors. But yes, right now it is the ideal best average revenue per operational bed that we target, anywhere between 18 months to 36 months of commissioning a facility.
Okay. Okay. And this expansion or this acquisition, which is whatever is your organic route or non-organic route, that will be happening only in the overseas countries, like where we currently have a presence, or we are planning something in India also?
No, like I mentioned, we are targeting about 350 bed strength, 350 beds in India also. So the expansion modality will be both for Africa and for India, depending upon where the opportunity comes and in which manner does it come.
Okay. And sir, just wanted to understand like how much 100 bed capacity or a 120 bed capacity, which is an ideal as per your business sense. What is the expenses which you need to incur in India to put up a setup to set up a capacity of 120 bed in India and vis-a-vis in the overseas countries?
Okay, so when we are talking of a 120 bed facility in Africa, it, in terms of the service portfolio, is almost equal to a 250 to 300 bed facility in India. When I say that, it means that, in a 120 bed facility or 100 bed hospital in Africa, we will still have the complete set of radiology equipment, the CT, MRI, digital X-rays and everything. We will have modular operating theaters. We will have the best of the best ICUs, which is something which a 200 plus bed hospital in India would, invest in. A 100 bed facility in India would not invest in everything. So the investment profile for us, when it comes to Africa, at 100 bed is almost equal to a 200 bed facility in India. The average investment per bed that comes in to set up a facility is almost similar. When I say it's almost similar, when we are taking the standard thumb rule or the standard profiling, which includes land, building, equipment, and the commissioning expenses, we are almost at par, because maybe the cost of construction in Africa is higher than the cost of construction in India. But then the land prices are the other way around. Land is available at a cheaper rate in Africa compared to India. When it comes to India, a hospital at 200 plus bed would want to take, the highest, technically the highest equipment that is available. So it would go for an MRI, which is the latest, which would cost about, say, 10 crore rupees, example. Okay. The same thing in Africa will not be required. A 3% MRI will not be needed in Africa. So we will go with a technical specification, which is a slightly lower one. So the cost of investment will accordingly vary. So when we average it out, it is almost the same, whether it's for Africa or for India.
Okay. Okay. And so in case of number of doctors, so how many doctors are on a permanent basis, and what is your policy of having more of a permanent doctor, or maybe on a what is in the medical term is called a contract basis or in a visit basis? So,
like I mentioned, I think in earlier query also, out of the 150 specialists and consultants, we got about 55 or 60 on a permanent basis. The rest are contractual or consultant model, where they visit our facility. They visit a lot of other hospitals also in the geography of the presence. So this is the mix that we have right now. The idea in terms of full-timers is to get full-time doctors who are mainly physicians who form the key service profile of the hospital in terms of managing it 24 hours every day. Okay. So the ICU doctors or something of that sort. When it comes to super specialists, it can be a mix of full-timers if they are expatriates, if they are doctors from India or from any other country that we've called for and positioned them in that country. But if they're local doctors, then we follow the consultant model or the contractor model.
Okay. So, and a last question about your medical tourism, in the sense the travel, what you wanted to, provide. So, right. Is there any company which is there in India and your companies are already existing in India?
So, see, medical travel was something that Unihealth actually started with in 2010. So that was the first vertical of the company. There are multiple companies in this field today as we speak. In 2010, there was barely any competition, or there were fewer number of companies. But today, if you look at it, it is a very competitive market. There are multiple companies which facilitate, and every single major hospital chain itself is also directly present. So you're competing not only with similar peers, you're also competing with the likes of Apollo, Medanta, Max, and everyone. But the unique advantage that we have is twofold. One, we've got physical presence in a lot of the countries from which we are targeting patients. So basically, I've got my hospitals where patients come. If we are unable to service them within the hospital for a particular, treatment, we have that advantage of referring that patient to India. So that is one major first advantage that we have. And second is the unique model that we have pursued since the beginning. So Unihealth had a very, unique collaboration with Ethiopian Air in 2013, under which we had launched a program called Unihealth Ethiopian Air Medical Travel Program, where we were accessing all physical offices of Ethiopian Air across Africa to provide medical travel services, to promote and market these services, and also give massive discounts on the air tickets for your travel, which would attract these patients. Now we're pursuing similar discussions, like I mentioned, with Air Tanzania, with Myanmar Airways. So we have certain unique, product profiles that we are venturing into, which give us a slight advantage over the peers that we have and even over the hospitals that are competing. But yes, it is a fairly competitive market in terms of medical travel.
And the margins will be comparatively better?
Margins are, I would say, when you say comparatively better to what? I mean, in terms of the industry with our peers or?
No, usually other verticals of the business.
No, so I wouldn't say that the margins are comparatively better than the other verticals, but it helps us complete the service profile of the entire group. What happens is we get a lot of patients at our hospitals who may need a kidney transplant or a liver transplant or advanced cancer care. And we are unable to provide that in the hospital, or it is not even available in that country. So when that patient has to travel out, it is really better for both the patient and for us as a company to take care of the entire requirement within the company itself, as compared to referring it to another agency or another hospital outside to do that. So the margin will be slightly lower than what we achieve in our other verticals, that is distribution or the hospitals itself. But yes, it helps us complete the entire product profile.
Okay. Yeah, right. That's it from my side, sir, and thank you so much, and all the best for the future.
Pleasure. Thank you.
Thank you. The next question is from the line of Purvesh Tibrewala from Fin Avenue Growth Fund. Please go ahead.
Yeah, sir. Am I audible? Hello?
Yes, sir.
Okay. Thank you for the opportunity, sir. So I wanted to know that we were putting up a syringe facility in the African country. So is the facility complete, or by what time the facility will get completed, and what is the revenue potential for it, sir?
Okay. So we are putting up a syringe manufacturing unit in Tanzania. The facility is presently in the process of, getting constructed. So we expect to commission it somewhere around 9 months from now. So we expect the commissioning of that facility somewhere around June of the next calendar year. The idea is to start with syringe manufacturing, disposable syringes, and then add a variety of other similar lined products, medical consumable products for that. These countries, Tanzania is heavily dependent on importation of all these medical consumables. So the government is very, very keen to locally indigenize the entire product profile for local manufacturing and is supporting the entire, initiative. Very recently, we had the Tanzanian president visit India. It's just about a month back, and he in fact signed various MOUs to promote manufacturing. So there are certain government incentives also, plus the procurement is mainly going to be by the government itself. So that gives us a very strong standing in terms of ensuring that our 100% manufactured product is getting sold within a much shorter wait period as compared to a competitive market like India.
Okay, so we'll be manufacturing there only, and all the syringes will get sold in Tanzania only? And
yes, initially it will be that way. Definitely, going forward, we may explore exportation to the region, the East African region. So Kenya, Uganda, Rwanda, Burundi, those countries which were in the neighborhood. If we are able to realize better profit margins, then we may, look at exporting about 20% of our manufacturing capacity to these markets.
Okay. And so what will be the revenue potential, sir? Like, this is a ballpark number, something kind of that?
We are initially putting up a plant with a capacity of about 200,000 syringes per day. So we will be targeting about 5 to 6 million syringes every month. So I can share the details, this number in terms of the production capacity of the facility. The revenue potential and everything may be in due course. As we go forward, we will be able to share the public domain.
Okay. And the other products which we are targeting, like similar to syringes, like, it will be on the consumable side as in the cotton and all that stuff kind of?
Yes, it will be on the consumable side itself. So after, once we successfully start manufacturing syringes out there, I will be then adding on infusion sets, blood giving sets. So a lot of these products which actually are used collectively in any hospital and which also have the similar raw material requirement to what syringes has. So in terms of equipment that we will be investing in, we will not need to reinvest in the entire line. We will be able to roll out these products by investing in only certain aspects of the equipment. So certain manufacturing processes will be requiring newer equipment. The others may be like injection molding machines and everything will be common. We just need to invest in newer molds, not the entire equipment set. So that will reduce our cost of investment, that will reduce our OPEX as well.
Okay. And the next thing is, sir, we are also exporting medicines and all that stuff to our sister concern and African countries, but that is what currently is for captive use. No? So are we planning to distribute in other countries and for non-captive use purposes?
So even at present, it's not 100% for captive use. What we are doing is we have targeted geographies where we have got hospitals because we've got a very strong on-ground presence, on-ground licensing networking, as well as the available infrastructure required to, store and manage the inventory. So that is why we've targeted Uganda, Nigeria, and Tanzania to begin with. But it is not 100% captive. Even today, we are distributing or selling the imported goods to other medical centers and hospitals and even, agencies related to the government of these countries or the United Nations. Like, for example, in Uganda, we do sell to UN as well, the UN comics and everyone. So going forward, definitely we will be exploring increasing the distribution to these kind of clients. Because captive requirement definitely is not going to be increasing within the same geography in a multifold manner. But the potential to actually increase the business is there. So we will be taking part in government tenders or tenders by a lot of NGOs also in these particular countries. So once the certain products that require registration, once the registration is through, then that business is likely to increase multifold.
Okay. Got it, sir. And my last question is, sir, as you said, we are targeting almost around 300 bed capacity in India. So is it like that, whatever hospitals we are bidding for as a consultant, we are putting up a condition that we'll be the only consultant and then only, we'll operate and then only the consultant. Is it like that or we are okay with anything?
No, so that is not a condition to any contract that we will only operate. But the majority of the clients that we are catering to right now come from a segment where they are not natural operators. So they are not hospital owners or operators themselves. They are like in India, for example, in Pune, we are doing a hospital which is a 500-bed health city to be developed in 2 phases. Now, this entire health city is being promoted by a bunch of like-minded people who have come together in a non-profit manner. So it is under a Section 8 company that the project is being developed, and these people who are back on the project come from different industries. None of them come from the healthcare industry. So eventually, for them, we are going to outsource the operations to some hospital group. It can be us, it can be someone else. But the benefit that we have is that we have been associated with them and with similar clients otherwise, since the conceptualization stage. So there is a beautiful working relationship that Unihealth has developed with them. There is a personal rapport as management team of Unihealth that we have developed with them. So that plays to our advantage because we have thought about the project and designed it at our end and we're helping them execute it. So when we want to outsource the operations, definitely, we stand equal chance to any larger hospital group in the country. In terms of relationship, by the time the hospital gets commissioned, we would already have had a relationship extending of 3 years plus or maybe 5 years plus, depending on the project size, with the project owners. So that will play to our advantage, but it is not a precondition. It is a model that Unihealth has, which we have shared with each of the clients from the outset itself. So a lot of times these informal discussions will happen with them, but definitely it is not formalized or contractually bound at this moment.
Okay, okay. So the 300 number might be conservative also. If we get
It might be conservative. Yes, it might be conservative also.
you might go up like very fast, say 500 or any else figure, because again, as a Unique hospital is 500 beds. So if we get that, the 300 is like achieved in just a short time.
Right. So the possibilities and the opportunities are plenty. Definitely, we would, like to be conservative at this moment and hope for the best in terms of the growth.
Okay. Okay, sir. Thank you very much. That's it from my side.
Pleasure.
Thank you. The next question is from the line of Hiten Boricha from Sequent Investments. Please go ahead.
Hello.
Yes, certainly.
Yeah. So my question is on the Tanzania, which is under construction. Is this facility, is the brownfield capacity, is this a new capacity facility which we are starting? I didn't get that exactly what's happening there.
No, it is going to be a new facility in terms of the overall business. It is not an existing manufacturing unit it's starting with or expanding the capacity. It is going to be a completely new unit altogether. In terms of the infrastructure that is needed for it, a part of that infrastructure was already available in terms of the overall building and everything. Whatever extension is needed, that is being constructed right now. Once that is done with, maybe in the next month and a half or so, then we will start work on the clean rooms and the HVAC systems and everything before we can, install the equipment and start the project in terms of manufacturing.
So what is the total investment we are doing here?
So out there, the total investment will be roughly about millions, about 8 crore rupees that we will be investing in the equipment and the initial setup that is needed for this facility.
8 crore, right?
Yes.
Okay. And my second question is also on the capex. So you mentioned, sir, we are planning for around 25 crore capex in next 2 years.
Right.
This 2,500 crores is total for 200 to 1,000 beds, or what is the total capex we are planning for 200 to 1,000 beds?
Right. So I answer this in two parts. Now, in certain countries, as Unihealth, we have always. Hello.
I'm so sorry to interrupt, but your voice is breaking in between.
Okay. Is it fine now?
Yes, sir. Yeah.
Yes. So I'm saying in certain countries, we have got our local partners already. Like in the countries of our presence, Uganda, Nigeria, we've got local partners. So as and when we are expanding our footprint in those countries, the entire capital investment that is going to be made is going to be made by us in equal proportion by our local partner, and we are also open to funding from the local banks out there. So whatever capex outline that we have outlined at this moment, whatever I've mentioned in terms of the 24 crore rupees of capex, that is the contribution that Unihealth Consultancy will be making towards achieving the commissioning or realizing the projects that are presently formalized to a large extent, or in terms of the strategy, the location and everything. Definitely there is going to be investment from our local partners also, and there's going to be certain amount of funding that we may look at from the local banks, maybe in terms of the working capital, equipment finance, in this manner. So the overall capital investment that will eventually be made to roll out the project is going to be higher. It's going to be more than double of what I've mentioned. What I've mentioned is only the contribution earmarked by Unihealth at this moment.
Okay. Understood, sir. So my last question is on the current beds which we have. So can you explain me what's the model we have here? So you mentioned Uganda, we have 120 more beds, which is owned by our JV, right?
Yes. So in Uganda, the land, building, equipment, everything is owned by Victoria Hospital Limited, which is a joint venture company of Unihealth Consultancy. Unihealth Consultancy has an equity stake of 50%, and 50% is held by local partners. In Nigeria, the 8-bed facility where we have the land and building is owned by a local, third party, and the company, UFC Global Health Limited, which is a JV of Unihealth Consultancy, that owns the equipment and is operating that facility. So that premises is on a long-term revenue share model.
Understood. Yeah. Thank you for my questions.
Pleasure.
Thank you. The next question is from the line of Vaibhav Shah from Cogent Finvest. Please go ahead.
Yeah, hi. Thanks for the opportunity. I just wanted to understand what are the risk factors that you see while operating in the Africa because of their political situations and ongoing various things we heard in the news. So what's the real situation on the ground, or what the risk factors you see while operating in the Africa in terms of your political as well as your operating measures, etc.?
Right. So if we go by the specific technicality of socio-political or geopolitical risk factors, definitely these countries have a way higher geopolitical risk factor compared to a country like India. But on the ground, over the years, over the last 7-8 years of our presence in terms of our own investments on ground, we've not encountered any specific security issue or geopolitical issue. Now, two reasons. One, very simply put, if someone is staying in the US or UK and there is a disturbance somewhere in India, maybe in the central part of India or in the northern part of India, and incident happens, there are travel advisories in US and UK advising their citizens to not travel to India. So if there's a small, issue, say up north in Kargil, Bombay is not going to really be affected by it. People can very safely still travel to Bombay. It is a similar situation when it comes to a lot of these countries. For example, in Nigeria, you would have heard or read about Boko Haram. Boko Haram, Nigeria is a big country with almost 200 million people. Boko Haram is centered in a small pocket, similar to say our issue in northeast or central with the Naxalite. It's similar. It's there in a particular part of a particular state. It does not equate to the entire country. So the remaining country is open for business and absolutely safe to move around. But what comes to India in terms of the international media is the risk profile of Nigeria. So socio-political or geopolitical risk is not something on ground that we have ever experienced, but it adds to a benefit for us in terms that the overall entry barrier for any international investor in terms of investing into that particular country becomes relatively higher. So he does not. So if I have taken the risk of actually going there on ground, despite all these issues in the media and setting up a facility, the chances of a competitor actually coming in are fairly low because people are concerned about it. For us, the advantage has been that we have been present on ground since long before we started investing into it. Like I mentioned earlier, we started with medical travel as our initial business, because of which we had actively traveled to all these countries for a very long number, a good number of years, 5 or 6 years before we started investing in them. So we understood these geographies very well before taking the plunge and investing into these countries to serve hospitals. So that was one part. Second part is that healthcare is the need of the hour out there. So it is something which is needed by the ruling government. It is something that is needed by the opposition. It is something that is needed by the police force. It is something that is needed by the military. So almost everything or every agency or political collaboration in these countries need quality healthcare. So healthcare from that perspective is fairly well protected because the patient base that we have. So in Uganda, for example, we are the only UN accredited facility in the country. So we've got the entire United Nations as our patient base. We are also the preferred hospital of choice for the Ugandan military. Similar goes for the parliamentarians, the cabinet ministers. So overall, the patient profile is also such that as a hospital, as a healthcare company, we are fairly well protected, well cushioned from a lot of these kind of issues that from a perception may arise. The only major risk factor that we can look at is the currency depreciation. So in Africa, the currency risk is fairly high compared to a lot of other countries. So that is something that is, a fairly higher, risk factor, which we prefer factoring in when it comes to Africa compared to these geopolitical issues.
Okay. Okay. Another part of the question, what are the operating challenges you are able to find the skilled manpower for, let's say, for doctors as well as nursing staff for the hospitals, or you have to migrate people from India, or how is the position for that?
Right. So, initially, when we started the facilities, we had a good number of expatriates from India, both in terms of the nursing staff, the doctors, the technicians, employed with our local units. But over the years, after 2 years and 3 years, when their contracts expired, a lot of them were replaced by local manpower by us. So what we have done is, one, when it comes to doctors is not really a challenge in any of these countries because the government has collaborations with US, UK, and Indian hospitals and universities where the best of the best undergraduate students, what we can equate to an MBBS doctor of that country is sponsored and funded by the government and sent to a facility in India or UK or US to train. And eventually, once they are trained, they have to come back and serve within the country for X number of years. So the medical manpower in terms of doctors is available. They are very skilled. The challenge till now was that they did not have access to infrastructure to actually go and operate, their patients using the right kind of equipment. With us going in, putting the infrastructure, these doctors are more than happy to actually come and operate at our facilities. So, in terms of medical doctors, it's not a challenge. Nursing and paramedical, technicians or in terms of dialysis or radiology, that is a challenge to some extent. And for that, we have Indians who are positioned in these departments out there. And getting engaged in these particular departments is not a very big challenge because when the pay scale is way better than what they're making in India, you're able to, get these people to relocate. For Unihealth, the advantage is that since we are an Indian incorporated company with a footprint and presence in India, the trust also that these manpower need to decide whether they can relocate to Uganda or Nigeria is well established. They can come, they can visit us in our office, speak to the HR department, get a video call with our local team out there, where the Indians already stationed out there, and get that comfort. So that has worked to our advantage, and now we have been actively investing in skill development at every local unit, so that when we want to expand, it helps us to have well-trained staff already available, which can be picked up and repositioned at the newer units.
Okay. Okay. And what is the payment terms in this country? Basically, insurance will not be having a very wide coverage, let's say in Uganda or Nigeria. So how are the payments assured, or do we work with government, or how is the scenario?
Right. So payment terms of the patient profile for, in terms of the payment modality changes from country to country. For example, in Uganda, like you rightly mentioned, the insurance coverage is very minimum. So you do not have a lot of people on insurance. The government itself does not have a national health insurance scheme like a lot of other countries. So the patient profile shifts from insurance to a lot of corporates. When I say corporate, it is like, for example, the Ugandan military. The entire payment is made by the Ministry of Defense. The United Nations beneficiaries, that those patients are paid for by either UN directly or by the international insurance that the United Nations have taken. Like, for example, China. Then there is a small proportion of private insurance companies or regional insurance companies which make payments. So for us at our hospital, it is a mix of all of this. 25 to 30% of the contribution is from cash patients. About 70% or contributions from credit patients of these kind of corporate clients, of which some of them are backed by the government. For example, the Ugandan military. Eventually, it's Ministry of Defense, which is part of the government. So the payments come from them. When we go to Nigeria, the ratio changes majorly. It becomes about 70-75% as cash patients, and only 25% is credit patients to, leading corporates out there or certain medical insurance companies out there. In Tanzania, the government itself has a national health insurance scheme. They call it the NHIS, National Health Insurance Fund. So the payment comes from that particular scheme. So the patients, almost 70% or 75% of the patient base is from NHIS and paid for by NHIS. Those payments normally are able to receive in anywhere between 90 to 120 days.
Okay. So, for the Uganda part, what will be the payment cycle from the government?
So in Uganda, the payment cycle from the government extends quite significantly and go in between 9 to 10 months of actually submitting the bill. But the benefit is twofold in that one, the overall treatment charges that the contractual rates with the state government agencies are higher than your cash patients. So basically, the cost of funding incurred by the company is already taken care of in the margin which is there for these patients. Second, in the history of Uganda over the last 25, 30 years, and in our discussion with a lot of bankers out there, what has been established and what we've also seen in the last 5 years of our association with them is that one, there is never a default in the payment, so it has never so happened with any company that there's been a default because eventually it is the government which is paying. And second, there's never been a deduction. So when it comes to private insurance, we have to factor in a margin of about 2 to 5%, which may get deducted based on rejection of certain bills that the insurance has, similar to the private insurances in India. But when it comes to the government, if a bill is for $100, you will receive $100 payment. Even if it comes after 9 months, it's not going to be $99 or $98. It is going to be a full $100. So that is another benefit, that the rejection ratio for these payments is 0.
Got it. And in these three countries, how is the competition scenario in terms of any other big player are operating or government-run hospitals, or how is this situation? So
competitors are there. Government-run hospitals definitely are there, but government-run hospitals are somewhere where the paying patient would not really want to go. So that is the swaggy state of the hospitals itself. So those are not really our competitors. Then there's the private sector. So there are few local hospitals. No international chain is there per se, which is there present in these countries. So competition is not there from international players. It's mainly there from local hospital groups. So some doctors would have owned a hospital or older hospital which was already there over the years. The benefit that we have is twofold. One, we focus highly on specialized and super specialized care. So that is allowing us to fill a supply-demand gap. A lot of the local hospitals which are there, their main focus has been basic surgeries till now. Second, when they are looking at expanding into specialized and specialized care, the challenge that they are facing is twofold. One, the cost of equipment for them is way higher because they are procuring locally from the local distributor of GE or Siemens or Philips or whosoever it is, versus us where we have the ability to procure from India and export it at a marginal cost. So, since our cost of investment becomes low, automatically we have that added advantage out there. Second benefit that we get is in terms of manpower. They have to be dependent only on local manpower because when it comes to Indian manpower, whether it's technicians or paramedical nurses or even doctors, for them it is relatively difficult to source them and to develop trust. Vis-a-vis Unihealth, we are able to do it in a much easier manner. So from these two folds, we have that advantage over these local existing facilities when it comes to the overall business potential.
Okay. So last two questions. One is related to the manpower. So the Indian manpower cost in these African countries and local manpower cost, what would be the difference between both of them? And also the same Indian manpower, if he is working in India against Africa, so what will be the cost difference?
So I'll take the second question first. If a manpower is working in India and if I'm to relocate him to Africa, that particular manpower will easily make at least twice of what his earnings in India are on a net basis. So if he's earning after tax is earning in India, say 50,000 or 40,000, he will easily make upwards of a lakh rupees, plus all his other expenses in terms of accommodation and everything are taken care of. So his savings are much higher. Now, the second part of the question, the difference in the pay scale for a local manpower versus the Indian manpower. So that is something that we cannot have as a standardized, thing, because it depends from a, what do you call, segment to segment basis. So there are certain technicians, certain departments where a local technician may make $200, but an Indian may make $800 or $1,000. And there are certain where it may just be double, but definitely the difference is going to be more than double. So the local manpower, whatever my cost is, eventually if I have to take an Indian manpower, it's going to cost me upwards of twice that particular expenditure. And that is one reason why over the years, after the first 3 years, we focus a lot on skill development and, shift base from having expatriates to having locals. So we've created that entire bunch of local manpower also, but it cannot be 100% because there are certain technical aspects which we cannot rely upon when it comes to local manpower as yet. Certain high investment related equipment like CT scan and MRI, I will need a technician from India. So that as a company, we are more safe and secure in terms of the overall handling of the equipment. So yes, hopefully I would have answered both aspects of the question now.
Yeah. And the amount of treatment that are available with this hospital can be equivalent to Indian hospitals, or there is a still part of medical travel that will be involved for let's say some kind of a high-end surgery, or how is the scenario?
Right. So there is some part of medical travel involved. So none of these hospitals today that we have can perform one organ transplant, so kidney or liver transplant. They do not have radiation therapy units out there, so we are performing chemotherapy and cancer surgeries. When it comes to radiation, we do not have that equipment at our hospital, and there's barely any equipment in the country also. Uganda has just one unit of which has a radiation therapy unit, which is of the government. They can cater to about 1,000 patients every year, whereas the number of patients requiring radiation is upwards of 15,000. So there's a big gap, and that is where the medical travel comes in. But all the routine specialized procedures like a knee replacement, hip replacement, spine surgery, or neurosurgical procedure, all those we are comfortably able to perform at our hospitals right now.
Okay, got it. And the last question is related to Myanmar. So what are we doing in Myanmar exactly? So hospital has started, or what's the scenario? And
Go ahead. Sorry, I thought your question was done.
And also, do we any kind of a way working with the junta or with a local partner?
Okay. So I'll address this again in the second part first. One, we are not working with the junta or the government of Myanmar or any particular establishment. We are working directly with the local private partner out there. That is first part. Our collaboration or the MOU also that Unihealth has entered into has been witnessed as a witness signatory by the Indian Embassy. So the initiative itself was taken by the Indian Embassy in inviting not us but a bunch of business delegates in Myanmar to explore the possibility, and that is how we initiated this particular project with the local partner. Now, second, what the stage of the project is. So what we're looking at is a 300-bed hospital in 2 phases. The building structure, the superstructure is already there. So that construction has already been completed by the local partner. Now the expertise required to actually convert that building into a hospital is where Unihealth comes in. So this project again we are doing on the DBO model that we have, design, build and operate, where we are first going to help them design it, then execute the entire aspect other than the construction. So when I say execution, we'll help them plan the equipment, the processes and everything, take it to the commissioning phase, and eventually look at operating it. Right now, the project is at an MOU level. The agreement level will be crossed over maybe in another quarter or so, following which that project will move ahead. On ground, whatever local formalities are needed to actually take this forward, including a financial closure at the partner's end, at the client's end, that is an ongoing process right now. So hopefully, in tandem with the timeline for the agreement, that particular process will also get completed with.
Okay. So this is not included in the 1,000 beds expansion?
No. No.
Okay. Got it. Thank you so much and all the best.
Yes, sir. Thank you.
Thank you so much. As there are no further questions from the participants, I now hand the conference over to Ms. Chandini Chande for closing comments.
Thank you everyone for joining the conference call of Unihealth Consultancy Limited. If you have any further queries, you can write to us at research@kirinadvisors.com. Once again, thank you for joining the conference.
Thank you. On behalf of Kirin Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you, everyone.